Hi, everybody. This is Shae Brown, shaesellshouses.com. I am a realtor in the Atlanta area for Better Homes and Gardens Metro Brokers Real Estate. And I have with me my dear classmate from class of 95, Southwest High School of Macon, Georgia, Miss Serena Galloway. I will let her introduce herself.
Hi, everybody. My name is Serena Galloway. I am from Georgia, which you can probably hear in my voice, but I am right now currently a resident of Houston, Texas. I own an insurance agency, and so I'm independent. And what that pretty much means is that I'm not connected to just one insurance company. I have multiple licenses with various insurance companies. So we offer all personal lines, auto, home, umbrella policies, flood insurance, life insurance, health insurance, pretty much anything that's related to insurance, I offer it. I am licensed in Texas, of course, also Louisiana and Georgia because I can't leave Georgia out.
Mhm.
So I offer all of those products in all of those states. I can be reached. I have a website at www.insuredwithserena.com. And then my office information, contact number is 281-886-7125.
Awesome, awesome. So make sure you go and you follow her on social media. I'll have all that information posted here too. So we're going to do these from time to time because there is definitely a correlation between real estate and insurance, whether it's in the fact that before you buy a house, you've got to have some an insurance policy in place for that house. If you're selling a house, there are things that you need to do, but also there are questions that come to me from potential buyers that are thinking about where they can get their money from for pulling from for down payment or for closing, but also for their future. What are some good things that I can do to save, not just have money sitting in the bank? What type of insurance do I need? What's a good idea about insurance? Does it depend on the type of life? And so I always want to defer that over to experts so that they can answer. So I am excited that Serena is agreeing to do this. So Serena, I will let you kind of take it over from here. I knew I threw a few questions out there, but let us know some of those basics, and then we can go on to some other things too.
Okay. Okay, so as it relates to real estate, definitely the first thing, as Shay mentioned, is having home insurance. That's going to be a criteria, if especially if you have a mortgage. Even if you're doing a cash deal, you should still have home insurance because if you're paying your money, you don't, and something happens, you don't want to have to spend your own money or be at a complete loss if something happens at your home. But as far as the home insurance is concerned, some things that you want to know or should know when you're in the process of searching for insurance is that you don't have to accept the insurance that sometimes the lender will pick a insurance for you.
Mm.
You are welcome to shop your own insurance at any
Okay.
point at the time of closing or even further down the line if you're in escrow, which means your monthly payment is coming out of it's basically combined with your home mortgage every month, you can still shop it at any time and change it. But some important things to look for in your home policy would be your deductible. That's going to be the biggest thing for everybody because if you have a claim, you need to know, okay, the claim is $3,000. If your deductible is $5,000, there's no sense to file a claim because if you file a claim, even if the insurance company doesn't pay the claim because it's more than your deductible, it'll still count against you as a filed claim. So it happens a lot. I talk to people every day, and it's just one of those unfortunate insurance where they just really didn't understand what the policy entailed. And so, naturally something happens at your home, you say, let me call my insurance company because that's why you have the insurance. But not knowing the ins and outs of the policy can definitely put you in a situation where you really don't have the coverage or, your deductible just exceeds the damage. So you end up basically having to cover that. So,
You know what? That is such a good point because even when I think about people, and I know a lot of folks want to go for the lower deductible even sometimes because
mhm.
you won't have to pay as much if something happens. But then sometimes, over time, over years, does it make sense to have done that? Because whatever you have saved, you maybe could have put in a savings account and now get a higher deductible. Or, like same with the car. If you have $1,000 deductible and the repair is $700, doesn't make sense to claim the insurance, but they automatically think that they should. So it's about doing the math on things too when you're choosing what to do, what policies to get and what terms to get.
I usually tell clients when it comes to the home insurance is really you just don't want a situation where you're completely out of your home and you don't have anywhere to go. So those are the type of things you really want to use your
Mhm.
insurance for. It's not for those small things like someone threw a rock and broke your window, or somebody broke in and stole your TV. I mean, because those things do happen. And yes, it's an inconvenience. So I'm definitely not saying, anyone's property isn't valuable. I'm just saying in the scheme of things, and when it comes to insurance, is really for those big things that really will leave you strapped
Mm,
if you didn't have the insurance. So that's something to think about to your point. So, it is with homes, um I'm not as cautious with having people to carry a higher deductible because it does save them on the premium. And so in the long run, sometimes it does also keep them from filing those small claims that's
mm,
really going to hurt them as well. One of the big questions I get a lot of times too with homeowners is, well, my mortgage is 500,000, but you're saying that my home is worth 700,000. It's the dwelling coverage.
mm.
Dwelling coverage and the mortgage are not aligned. So
Okay.
what the market says your home is worth and what it would cost to rebuild your home are two separate things. And so, yeah, they may not be. I mean, I get very few. I would say over the course of 20 years, I probably have seen maybe 10 that were right in there together. It just doesn't normally happen like that, but it's not an issue. Even if it's lower than your mortgage, basically it's still saying the insurance company knows that this is what it will cost to rebuild your home if it completely burned to the ground. But
Okay.
think about that. How often do we see homes that completely burn to the ground? So,
Right. You
yeah,
see that a lot too, like even when taxes are going up, and I know it can be bad, but then it's a good thing too, because your property
yeah,
value is increasing too. But it is something
right.
you have to think about. Like when I talk with buyers and I'm thinking about, what type of house do you want, but also what's the lifestyle you want, because you have to think that expenses may increase over years if you're in a good area where your house value is going up. We just have to be real about that. And part of your escrow, like you mentioned, is part of your taxes. And so if your property
Hmm.
taxes go up, that monthly escrow is going to go up too. And it's not always a bad thing, but you want to plan for it because, hey, if you want to sell your house in the future, it's a great thing.
It
There's
is.
equity there, so it is a good thing to think about. But that part that you mentioned about the insurance and it going up and things like that, that's a key part to it too, that I think a lot of people also, get kind of worried about as they're trying to figure out what to get for their house. So, is there anything else, any other nuggets you think you want to give people to talk about in terms of getting home insurance for a house or maintaining home insurance for a house?
Yeah, so one other big piece, and I know I say all the pieces are big, but I'm telling you, these are the important things because some things don't matter as much, but knowing the difference between having a replacement cost policy and an actual cash value policies. And
Oh.
a lot of agents, I'm not saying people are shady, I'm just saying I've seen some declaration pages and I'm like, nah, why did you give them this coverage? But one replacement cost policy, no matter what, unless you just absolutely cannot afford it. But replacement cost basically means that you buy that, it doesn't matter what the value changes to in 10, 15 years, you're going to get that same house, replaced for whatever the value is. So if it's 10 years from now, obviously the value would have changed, but
Mhm.
you want it to be replaced. You don't want depreciation to be considered when it comes to your home, because if you have an actual cash value policy, and even if it's just a roof, it may not even be the whole home. Anything that happens, depreciation is going to be considered if you do actual cash value. So
Oh.
take a look at the policy. Sometimes it's not always clearly on there because, as I was saying earlier, I have a lot of appointments with many different companies. So I look at the deck page sometimes like, hey, like what is this? But I know what I selected in the portal, but the deck page doesn't always show it. So if you're not sure, pull it out, take a look at it. If you don't see whether it's replacement cost or actual cash value, call your agent, call your company, ask the questions because the time to find out is not when something happens.
That
It's
is
gonna be too
good.
late then.
Unless you're in very few situations, most times you're going to have appreciation. So if you've only done that replacement cost, what would they like? Say you did a replacement cost on a house and it was 100,000, but by the time you needed to exercise that policy is 200,000. Are they only going to fix like $100,000 worth of stuff on that? Wow.
Yeah. If it's
Wow.
so if it's actual cash value, that's how it works. Now, if it's replacement, they'll just replace it for whatever the today's value is. But if it's actual cash
Mm,
value, it's saying whatever is it was actually worth at the time you bought this policy with minus depreciation, that's what they'll pay.
minus
So
depreciation. At that.
and it's happened to clients, and I hate to see it.
Mm.
I don't even offer actual cash value unless if they tell me like, no, I just absolutely can't afford it, I will do it. But I'm telling you, it takes a lot for me to do it. And they also have to sign that they understand that
Ah.
it is an actual cash value policy because it can't come back on me and my E&O insurance. Like I just can't have that happening. And so
Yep.
yes, I do make them sign something saying, hey, I understand the difference and I understand that this is what I agreed to accept.
That's good. And something we didn't mention before is that you have a history in real estate because you were previously licensed as are you still licensed in Georgia or
I'm not.
okay,
No,
but you
no.
have
So,
that
and when I was
background.
in Georgia, yeah, I was licensed for 7 years before I moved over to Houston. So yes, so real estate is near and dear to me.
Yes, and it's good that you have that background because I know that can help you service, clients even more so. So, and thank you so much for this today. We are, as I said, we're going to continue to do this because that was such good information. And when you teach others, and so that's what we were aiming to do. So, thank you so much, and we will see you in the next show.